الشمس والقمر بحسبان والنجم والشجر يسجدان والسماء رفعها ووضع الميزان ألا تطغوا في الميزان وأقيموا الوزن بالقسط ولا تخسروا الميزان والأرض وضعها للأنام فيها فاكهة والنخل ذات الأكمام والحب ذو العصف والريحان فبأي آلاء ربكما تكذبان خلق الإنسان من صلصال كالفخار وخلق الجان من مارج من نار فبأي آلاء ربكما تكذبان رب المشرقين ورب المغربين فبأي آلاء ربكما تكذبان مرج البحرين يلتقيان بينهما برزخ لا يبغيان فبأي آلاء ربكما تكذبان يخرج منهما اللؤلؤ والمرجان فبأي آلاء ربكما تكذبان وله الجوار المنشآت في البحر كالأعلام فبأي آلاء ربكما تكذبان صدق الله العظيم.
بسم الله الرحمن الرحيم. الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين سيدنا ونبينا محمد وعلى آله وصحبه وسلم أجمعين. On behalf of the Islamic Research and Training Institute, L.II, and the Islamic Development Bank Group, it is my pleasure to welcome all the distinguished guests from outside the bank and all brothers and sisters from the bank. We are gathered today to celebrate the award of the IDB Prize in Islamic Banking and Finance for the year 1437 to a distinguished scholar, that is Professor Kabir Hassan of the University of New Orleans. Professor Kabir will present to us the IDB Annual Prize Lecture today on the topic State of Empirical Literature on Islamic Banking and Finance. Professor Azmi Omar, the Director General of L.II, will introduce the prize winner and also will moderate the lecture. There will also be a translation into Arabic. It's a simultaneous translation to Arabic. Assalamu alaikum wa rahmatullahi wa barakatuh. The floor is for Professor Azmi Omar.
Thank you very much. Bismillahirrahmanirrahim, brothers. Assalamu alaikum wa rahmatullahi wa barakatuh. Good afternoon to all of you. It gives me great pleasure to moderate this session as well as to introduce our distinguished winner for today, Professor Kabir Hassan. Let me first welcome our Vice President, Mr. Mansur. I didn't notice him just now. So that shows his interest in knowing more about Islamic finance. Thank you very much. Professor Kabir Hassan is a dear friend of mine. We have known each other since the 90s. So it's slightly more than 20 years. He's a professor of finance in the Department of Economics and Finance in the University of New Orleans. And he holds 2 endowed chairs. Very rarely we get a person having more than 1 chair. And we can, so as you can see, literally he has 2 chairs. He's sitting now. 1 chair, Hypernia Professor of Economics and Finance. And the other one, Bank 1 Professor in Business in the same university, University of New Orleans. his background, apart from the IDB prize winner, a bit about his academic qualifications. He received his BA in Economics and Mathematics from Gustavus Adolphus College, Minnesota, USA. MA in Economics and PhD in Finance from University of Nebraska-Lincoln in the US as well. He's, of course, a financial economist, well known in teaching, research, consultancy in the area of development finance, money capital markets, Islamic finance, corporate finance investments, international trade and finance. So he has done consulting work with the Islamic Development Bank, with World Bank, IMF, African Development Bank, Transparency International Bangladesh, UNDP, Government of Turkey, and many other private organizations. He has more than 200 publications, 52 in ISI. I mean, those in academia will understand. Those who are not in academia will not understand the meaning of this. Essentially, he has 52 in ISI journal publications. I mean, to academic ISI publications are very important because they determine the promotions of academic staff or professors. 181 in Scopus, 145 in ABDC, and 85 in AB. And these are acronyms used for different organizations that determine the quality of the journal publications. In journals such as Journal of Corporate Finance, Journal of Banking and Finance, Journal of Real Estate Finance, and many others, and Journal of Financial Stabilities, and many others. So his publications put Professor Kabir Hassan in the top 1%, of his peers, who continue to publish one graduate article per year over a long period of time, according to an article published in Journal of Finance. Some of you might know that in publishing in a journal, especially top quality journal, it takes sometimes 2 years just to get one article published in a journal. And those who have done that knows the difficulty. So that shows the quality of work being done by Professor Hassan. He has received numerous teaching awards for outstanding teaching from his University in New Orleans and many other organizations. So I will not dwell, but there are so many accolades that he has received. He's the editor of Journal of Islamic Economics, Banking and Finance, as well as International Journal of Islamic and Middle Eastern Finance and Management. He has published also and edited and published 9 books. He's the co-author with Mervyn Lewis, Handbook of Islamic Banking and Islamic Finance, and then Handbook on Islam and Economic Life, Islamic Capital Market, Product and Strategies, and he's also co-author of Islamic Entrepreneurship, and written the first book on Islamic finance that was published by Pearson in 2015. His latest book, Handbook on Empirical Research on Islam and Economic Life, is scheduled to be published in December this year by Edward L.II. He's also a visiting chair professor in universities in a number of countries, in Malaysia, Germany, Saudi Arabia, Pakistan, and Indonesia. And he's also active in professional associations, such as President of Southwestern Society of Economics, President of Academy of International Business, US Southwest, President of Association of Economic and Development Association of Bangladesh, and President of Southwestern Finance Association of the US. So given his background and achievements, so we have the right person here today to share his thoughts on a topic called the state of empirical literature on Islamic banking and finance. And so he will cover this within about half an hour to 45 minutes. About that, 1 hour. Go, yeah, maybe about 45 minutes, and then we will have question and answer with that. So with that brief introduction, I would say, because it will be longer, I now call upon Professor Kabir Hassan to deliver his lecture. The floor is yours.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم السلام عليكم ورحمة الله وبركاته. Thank you, Professor Azmi, for your nice introduction. I want to start thanking the IDB President and Dr. Khalifa, Dr. Iskandari, and I see many of my friends sitting on the audience today from whom I have learned personally. Actually, my journey started in Islamic finance back in 1994 when I first came to see our beloved teacher, Professor Umar Chakra. Is he here? I met him this morning. And actually, I am a person who has been trained in Western tradition. I have never gone to any religious school, never gone to taken any Islamic finance or banking class. I have been trained in the United States. I have lived in the United States more than half of my adult life. So it's a very interesting combination, and I was very surprised, to be honest with you, to win this award. I was attending a conference in Turkey, and when the message came that I got this award, and thank to Allah subhanahu wa ta'ala for bestowing this honor upon me, and that also puts me a higher burden to carry it forward. I think the reason, when I was thinking what sort of lecture I should give, I was thinking why I was chosen to receive this award for this year. I thought that maybe it's because of my contribution to the empirical literature in Islamic finance. I'm not a Sharia scholar, I'm not a theologian, so I deal with data, try to answer using modern technique. So my lecture is divided into 3 parts. First part, you already know what I'm going to say, but because of introduction, I'm going to say it. Second part is the boring part, because empirical research, until you do this, you know how to convey the message to you, but I just will do my best to make it a little bit interesting. And finally, the new empirics, where something new that I'm doing. And actually, I want to build a sub-discipline within Islamic banking, finance, and economics called Islamic corporate finance. And that's where I'm trying to do considering my recent literature. So with this, let me start with Islamic finance is a growing religious-based financial system. It is the only current financial system based on the teachings of a major religion. It is increasingly attractive for secular Muslims and non-Muslims as well. It represents a fundamental departure from conventional interest-based and speculative practices, relies completely on real economic activities, investment based on profit and loss sharing basis. Unlike capitalism, which treats money as a commodity, Islam considers money to be simply a measure of value. And many of the features of Islamic finance are also found in other religious and ethical systems. Prohibition of interest is present in all Abrahamic faiths. Interest was limited Hindu law, the Code of Hammurabi, the Magna Carta, and the Roman law. There is significant overlap between Islamic finance principles and socially responsible investment. Rejection of financial speculation preaches social justice, ecology, kindness, and it has the potential to introduce a financial system which is both ethical and stable at the same time. Now, there is nearly 1 in 4 people in the world are Muslims, 1.6 billion according to Pew Research Center study, and 60% of them live in Asia, 20% in MENA, 15% in Sub-Saharan Africa, 2.4% in Europe, and 0.3% in North America. And 57 Muslim majority countries, 1 in 5 Muslim lives in a country where Islam is a minority. And Islamic financial assets total $2 trillion at the end of 2014, a bit old statistics, it is probably higher now. And Muslims are an important part of the world economy. So there is a consensus among economists and researchers about the inefficiency of the interest-based banking system, partly due to alleged inefficiency, but more largely due to religious beliefs in the Islamic community. A new system of banking has emerged known as profit loss sharing. The main contributing factor of a profit loss sharing banking system is the prohibition of riba in the Holy Quran. And the intention behind establishing Islamic banks was the desire of Muslims to reorganize their financial activities to complement the principles of the Sharia and enable them to conduct their financial transactions without indulging in riba. The term riba is used in the Sharia in 2 senses. Riba al-Nasiya, fixing in advance a positive return on a loan as a reward for waiting to be repaid. And riba al-Fadl, which is encountered in hand-to-hand purchase and sale of commodities. Now, the Islamic community has rationalized the eliminating of interest based upon values of justice, efficiency, stability, and growth, and results in the sharing of risk of a project between the borrower and the lender. Returns are more equitable during good and bad times. Returns are only earned when the business venture results in the creation of value added. Interest-based lending tends to result in serving the most creditworthy borrowers and not necessarily the most productive projects. Then Islamic PLS banking allocates financing to the most productive business ventures as a share in returns is more promising. Now the cooperation is increased between borrower and lender to ensure success of the business venture, and the PLS system provides for cohesion between social classes as financing is equally available to anyone with a productive idea. And Muslim economists argue that an interest-based banking system breeds inflation, as the creation of money does not necessarily make a business venture productive, therefore not working towards stability. And the Muslim scholars have rebutted the arguments that interest is a reward for savings, can only be justified if it resulted in reinvestment and subsequent growth in capital, not solely as a reward for foregoing consumption. Other than the prohibition of interest, Sharia compliance leads to a host of rules and regulations: gambling, unjustified ambiguity, prerequisite that income be derived from productive economic activities and profits be shared fairly, ban on investing in certain industries that are forbidden due to their toxic effects on the society. There are many legally recognized forms of business arrangements in Islam, all being agency arrangements. The earliest beginning tracing to musharaka. The agent contributes to the capital for the project and thus may receive a higher share of the profits and losses. And mudaraba relieves the agent from any loss potential but provides for a lower share of the profit. And modern Islamic banking was derived from these earlier forms of business partnerships. And Islam has no ill feelings towards the Western perception of entrepreneurship as an economic activity. However, it has to be based on ethical and moral foundations and be socially acceptable. Islam considers the profit motive to legitimate and moral if it is Sharia compliant, and if it is not considered the ultimate goal of the entrepreneur. In reality, Islamic finance is not on par with those noble ideals. In several cases, the basic rules have been circumvented and pseudo-Islamic financial products were created. Sukuk bonds exactly mimic interest-based bonds in many cases. However, there is a growing standardization of financial instruments and practices, and IDV playing a very critical role in this matter. So what is the reality of Islamic finance? Most Islamic financial institutions are Sharia compliant. Few have aimed to achieve the higher objectives of Sharia, add ethical objectives to the financial products. The challenges of Islamic finance are manifold: education and the creation of awareness, the development of suitable Islamic benchmark for pricing of goods and services, the creation of efficient liquidity management tools, the unification of Sharia compliant risk management products. But as I speak, work is going on in all of these areas. The 2007 and 2008 crisis represents an opportunity for Islamic finance. Islamic finance, with its emphasis on reducing risk and preventing harm before it occurs, rather than minimizing harm after the fact, offers a compelling approach to finance that averts crisis. The ban on interest protects the poor from falling victim to predatory lending, which exacerbates the cycle of poverty. Financiers do not view borrowers as pawns to be manipulated in their endless quest to maximize profits, but rather as partners. Transparency is paramount. This helps reduce fraud and alleviates the negative effects of information asymmetries. Islamic finance's strong commitment to moral and ethics make it qualified to play the role of a potential antidote to a financial system plagued by crises caused by greed, fraud, and speculation. Now, the recent financial crisis led researchers to focus on Islamic banking sustainability. And sustainable banking is the ability of banks to have long-term solvency, and prosperity that would impact societal well-being and environmental protection. Studies have shown that Islamic banking practices are making efforts to improve their social objectives, but is still below the anticipated requirements for Maqasid Sharia measures. So Islamic concept of institutional sustainability has 6 components: the structural relation, functions, capacities, Islamic moral transaction mode, banking business accountability, and institutional monitoring and evaluation through internal and external controls are necessary for the long-term survival of the banks. And there is a need for a unification of Islamic banks' financial reporting standards that will capture all the required social and environmental indicators. Now, within the Islamic finance, where is Islamic economics come into play? Even though Islamic economics is not merely concerned with maximizing profit, it is part of a larger moral and ethical code of behavior that permeates all facets of society. Islamic economics remained primarily an integral part of the unified social and moral philosophy of Islam until after World War II. Neither of the then prevailing secular models of economic organization, namely communism, capitalism, fitted well with the Islamic ethos. And Islamic economics and finance has recently enjoyed a spike in interest and rise in status. However, smaller number of studies have been devoted to the study of Islamic economics. And by the way, I'm working also on a literature survey, Empirical, on Islamic economics right now. Islamic economics can be distinguished from conventional economics not so much by what it subtracts, but by what it adds. Conventional economics points to a picture of the self-interest rational being. Islamic economics lets this man keep his rational self-interest and insist that his soul is of paramount importance. Muslims ought not separate economic activities from religion. The pursuit of economic activities needs to be based on moral and legitimate foundations. And Islamic economics and finance is gaining traction because much of the Muslim world wants to relive long gone times when Islam was the dominant force driving world history. Solution to economic problems in the Muslim world can find solutions that are tailored to local conditions. It just makes sense that the poverty of the Muslim world can be alleviated by using ideas for development crafted from a faith that is central to the lives and culture of the area. Now, IEF must progress from its theological underpinnings to adopt the methodology and analytical framework found in conventional economics. IEF has to incorporate testable hypotheses. It must not be exclusive. Its theories and laws do not apply only to Muslims, but to the entire world. So it is important that these ideals be put to test in a global business environment largely unsympathetic to the model. How well have the religious-based values translated into actual performance? And that brings to my second part, the empirics, what has been done. Actually, I have reviewed 173 articles published in ranked journals. So please forgive me if I have omitted one of your articles that is not here, because I was going by the Science Direct publication list only. And that is a boring part of my presentation, but let me give you, and I see some of the authors are sitting here whose work I'll be citing here in my presentation. Now, previous research showed Islamic financial system as a superior one that operates more efficiently and with greater stability. 1986 Khan, there's a professor at Johns Hopkins, Darat 1988, Khan 1991 suggested Islamic economics has the potential for providing solution to socio-economics problems which fail to be solved through the conventional system. However, the relevance and validity of these findings must be reevaluated to incorporate recent economic changes. A review of the studies on the major components of the system, banking and finance, can provide a clear picture of today's Islamic financial system. This study aimed to review empirical studies on the Islamic banking and finance and to identify avenues for future research. The survey did not claim entire coverage of the literature in the area, rather focuses on articles from main journals with significant findings. The literature on Islamic banking shows that the system will operate within the utilization of real asset portfolios then enhance economic growth. Khan, Chapra, so Chapra is a founding father of Islamic economics, so he has a lot of papers and books in this area. Islamic banks have several goals: generate revenue for survival, extend capital allocation to the productive sector of the economy, increase financial inclusion. The review of the literature in Islamic banking will cover Islamic banks in practice, Islamic conventional banks, a comparative study, efficiency of Islamic banks, disclosure and financial inclusion. The actual nature of Islamic banking practices will not be clear without an in-depth review of the existing literature from various regions and periods. So while the two systems are different in many ways, in certain areas the practical reality shows similarities. Islamic and conventional banks have very few significant differences in financial risk. They contradict findings by Khan 1986, Darat 1988. Theoretically, Islamic finance is better suited to absorb shock through profit and loss sharing. Empirically, however, Islamic finance activities appear to be closely linked to traditional activities like conventional banking practices. However, recent studies find Islamic banks' financing quality has lower responsiveness to interest rate than their conventional counterparts. Recent empirical findings reveal an improvement towards practice standardization. Now, the prediction that Islamic banks are more resilient to shock held for a brief period of the beginning of 2007 and 8 crisis. During the crisis period, Islamic banks in GCC countries were relatively stable. They enhanced their credit growth performance compared to conventional banks. And Islamic banks maintained better capital ratios than their counterparts during the crisis. However, some researchers argue that Islamic banks performed well only in the immediate aftermath of the crisis. Our Katani is in the audience today. It has been shown that Islamic banks are more vulnerable to economic downturn than conventional banks. Furthermore, Islamic banks in GCC countries experienced a severe decline in efficiency 2 years after the financial crisis. There is a World IMF study, Hassan and Ridi, 2011, argued Islamic banks exhibited poor risk management. While Islamic banks are less cost efficient, the listed institutions had better stock performance due to the asset quality of higher capitalization. And this is a very widely cited article in Journal of Banking Finance. And recent findings conclude that Islamic banks are more resilient compared to conventional banks due to the fact that the latter are more volatile than the former. Performance. Previous studies compared Islamic banking performance with conventional in different aspects in terms of profitability, efficiency, capitalization, liquidity, asset quality. Jones, Isgeldin and Papas 2014 JABO article expressed two stages of findings related to Islamic and conventional banks' efficiency. Average efficiency is no different in either model. Islamic banks are less efficient based on a modus operandi scale. They call this a technological gap, but superior based on a managerial competence scale. Capital diversification and management quality are important factors of performance. The profit and income margins of both Islamic and conventional banks are determined by their capitalization diversification and management quality. Sharia boards influence Islamic banking performance only when they assume a supervisory function and have an insignificant impact in advisory roles. So the Sharia scholar cannot really play their role only being an advisor. They have to take more active role in correctly propagating or leading the Islamic bank to the right path. How about solvency and risk? Findings show small Islamic banks have strong solvency positions compared to commercial banks of the same size. The opposite true holds. Large Islamic banks have weaker solvency positions than their traditional counterparts. Capitalized Islamic banks pursue safer policies and are less risky due to higher liquidity with low non-performing loans. Alam found that higher Sharia restriction lowered Islamic bank risky behavior. Insolvency risk is influenced by the income structure of Islamic banks, since their depositor and shareholder structure constitutes a higher concentration of the industry ownership. Efficiency. Studies show the Islamic banks in Asia, mainly GCC countries, are relatively more efficient than Islamic banks in the MENA. However, within the GCC countries, Islamic banks are shown to be less efficient than traditional banks. Furthermore, regional studies show that in Malaysia, domestic banks are more efficient than foreign banks. Now, disclosure. Societal well-being is crucial in Islamic banking. It is, however, hard to measure given an institution financial reports. Corporate social responsibility and financial inclusion have been shown to positively impact banks' long-term performance. More than 90% of the poor population do not have access to microfinance in the OIC member countries. So what is the status of Islamic finance? We talked about Islamic banking. So while Islamic bank is the largest sector of the Islamic financial system, almost 80%, we cannot discount the other sectors, Sukuk, Islamic mutual funds, Takaful. These sectors contribute toward realizing economic, social, and environmental sustainability. Now, Islamic mutual fund, let's talk about Islamic mutual funds, allow investors to pool resources into Sharia-compliant securities. Risk aversion levels guide the behavior of investors. Short period horizons typically invest in Islamic bonds, and the long period horizons typically invest in Islamic equity. And the risk-averse investor rarely elect Islamic joint ventures. Joint ventures are affected by selection decision rather than moral hazard. However, researchers have argued the Islamic joint ventures do not resemble equity-like products following the 2008 crisis. They have higher ratings with lower risk. Regulators have to implement a strategy for enforcing standards compliance on the design and approval of products. Empirical evidence has shown that Islamic mutual funds perform better than their traditional counterparts. Daud Ashraf, one of his staff at IRTI. Islamic funds perform better even during the crisis. The risk management of Islamic mutual funds is better than their conventional peers. Their modified value risk is lower, while the risk management is superior in equity and riskiest class. It is not known with certainty whether the comparison between socially responsible investment and Islamic mutual funds will yield any variation of findings. Now, some researchers suggest the Islamic funds perform better than socially responsible investment. Others attribute the results to Ramadan effect. And there are also other types of religious effect that has been found in the literature. Empirical results seems to show that Islamic exchange traded funds will be more effective in reducing business default risk. Sukuk. Sukuk is another means for mobilizing funds to finance investment, and they are Sharia compliant securities with the attribute of both bonds and stocks. Research suggests Sukuk have lower volatility, which makes it more stable for investments. Some researchers pointed out that conventional risk evaluation techniques were not entirely suited for Islamic securities. Furthermore, they argue that Islamic joint ventures should be evaluated on the basis of equity, not on debt. Sharia compliance must be strictly enforced even in the face of accrued international competition. Now, empirical research shows that stock prices are influenced by the type of sukuk issued, the popularity of Sharia advisors, the distance of the issuer. It is important that issuers conform to the Sharia law consistently. And also, evidence reveals that sukuk market to have exhibited higher quality and less risk during the financial crisis. There's an article by Kenu Gertz found that Islamic portfolios had the potential to provide protection against stability and risk, especially during a crisis and when internationally diversified among emerging and developed economies. Researchers found that Islamic bonds had a negative correlation with the global stock market at the time of the financial crisis. Takaful. Takaful is a Sharia compliant alternative to conventional insurance. It guarantees repayment in the event of loss. The researcher argued that Takaful Corporation must attribute surpluses to the contributors based on a Mudaraba contract, since it is considered a cooperative venture. The above suggestion neglect other Takaful contracts such as Wadiya and Wakala with different attributes compared to Mudaraba contract. Now, empirical research in this area also shows the demand for Takaful is influenced by individual income, education, development, Islamic banks, the proportion of the Muslim population. Cost-efficient takaful industry is an essential ingredient that will lead to self-sufficiency. The size of the board and firm has been found to influence the cost efficiency, while splitting top management has no effect in the takaful industry. How about home finance? The crisis renewed research interest in this field, especially home affordability. Home financing has to occur within an interest-free paradigm which eliminates the burden on the weaker parts of the population. Some studies have found empirical evidence suggesting that rental rate is a potentially more resilient alternative to lending rate. Further research to find an alternative ratio to the lending ratio is needed. So this is what has been done, and I now want to share you a few articles that I'm working on right now. What I find from my survey of this empirical literature, that there is a dearth of literature in Islamic corporate finance, looking at a company, firm, and from the corporate finance perspective. So I'm going to share a few articles already published, working stage with you. The first one is liquidity and bankruptcy. A fully Sharia compliant corporation. We talk about Islamic bank, but do we talk about Sharia compliant company? So Sharia compliant investment and leverage decisions, Sharia compliant contracts, financial statements, conventional financial system analysis techniques and ratios might violate Islamic Sharia. Box, underestimating other possessions, gharar, avoidable uncertainty business transactions, riba, interest-bearing transactions. Both quick and current ratios raise BAK and gharar and riba problems. Now, why I'm interested in liquidity issue and bankruptcy in corporate finance literature? Because determining the value of corporate liquidity is one of the 10 most important unresolved problems in finance by brilliant Myers 2000 argument one paper is said. There is another paper argues that corporate liquidity can shed light on capital structure choice, valuation and credit spread. Horn and Weston and Brigham document that firm liquidity is an important managerial consideration when making dividend decisions. Covenants restricting current ratio are included in 2098 private loans made to the U.S. corporation during 1994 to 2005. So what we did here, we try to modify the definition of liquidity. We take, like for example, current ratio, and we try to make an Islamic equivalent of this ratio. And how do we do that? We want to make sure that it avoid that this developing the Islamic liquidity ratio. The idea is to measure corporate liquidity without underestimating the value of inventory, overestimating the firm's ability to turn inventory into cash. So you develop this formula, and then we are asking empirically, does this Islamic liquidity ratio provide better estimation of corporate liquidity? As corporate liquidity is a representation of firms' short-term solvency, a better liquidity measure should act as a better predictor of bankruptcy. So use the traditional Olson model, logistic regression, Altman model. Basically want to see whether this, our definition of liquidity, does a better job. And we collect data and we show that it actually does a better job. Islamic ratio eliminates the BAKs, gharar, and implied riba components of the conventional corporate liquidity measure. An Islamic ratio significantly improves the accuracy of corporate bankruptcy prediction models of Altman, Z-score, and Olson. And this paper has already been published in Emerging Markets Review. Now, let me share a current paper that I'm working with, oil prices and volatility. What is happening right now? Oil prices have fallen from around $140 per barrel in June 2014 to around $50 in this year. Therefore, the GCC countries are exposed to any movement in oil price, causing more volatility of their economic activity and consequently uncertain economic growth. The Islamic financial system in GCC countries have evolved as viable and competitive component of the overall financial system as a driver of economic growth and development. The question that you're asking in this paper, can Islamic finance development diminish the impact of oil volatility on economic growth in GCC countries? Basically, whether having a better Islamic financial system will mitigate the negative impact of oil price volatility. Why we are interested in this topic? Because there has been a literature showing the connection between volatility and economic growth. Empirical show that countries with higher volatility have lower mean growth. The effect of financial development in volatility growth relationship also exists. The literature has provided evidence that the financial system can act as a stabilizer and reduces growth volatility. So what we do here, we collect data. It's just a macro finance data. So we have our growth on the dependent variable. We have the oil price volatility standard deviation. We have the Islamic finance development indicator. Then we have a interaction term, then a set of control variables. If you look at this table, if you look at SD, oil terms of trade standard deviation, that is a measure of oil price volatility. If you look at the benchmark model 1, 2, 3, these are both negative and significant. But when you interact this term with this definition of Islamic finance development in a country, we find that negative coefficient becomes positive. That means it indirectly implies that having a developed Islamic financial system mitigates the negative impact of volatility on this country's economic growth. So our main findings show that the oil terms of trade volatility has a negative and a significant effect on economic growth in GCC countries. The positive sign of interactive variables between the indicators Islamic finance development and the oil terms of trade growth volatility that suggest in Islamic finance development may very well mitigate the negative effect of oil terms of trade growth volatility. In the new context of oil price volatility, Islamic finance can act as an engine of economic growth in GCC countries. So the policymakers should pay more attention to this industry. Now, cost of deposit insurance. Now, insurance has been studied from the theological standpoint, and it has been already the life insurance and conventional commercial insurance has been certified to be valid, provided it follows certain Sharia parameters. Now here I'm looking at the deposit insurance, try to show the risk-sharing, risk-shifting principle in Islamic finance. Most Islamic deposit insurance systems are under the implicit form scheme. Moral hazard problems are higher in the case of implicit deposit insurance system compared to explicit risk-based deposit insurance systems. Islamic banks are better capitalized than conventional banks. So already know this from the literature. Default rates for Islamic banks are lower than for conventional banks. But we do not find any empirical study on the cost of Islamic deposit insurance for the whole Islamic banking system and comparing the result to those of the conventional banking system. So we sort of develop hypothesis based on the literature. The hypothesis 1, publicly listed Islamic banks exhibit lower risk as measured by the level of implicit deposit insurance premium than publicly listed conventional banks and ceteris paribus. Privately held Islamic banks exhibit higher risk as measured by the level of deposit insurance premium than publicly listed Islamic banks. So we collect data and we borrow some of the principles, the model, the 3 major blocks using option pricing approach based on Martin 1977 and Ronborough 1986 modeling frameworks. It provides an estimation of the implicit cost of deposit insurance for publicly listed banks. Using the market comparable approach introduced in Falkenham and Penacci 2003, it consists in identifying the relevant risk loading factors that explain the cross-sectional variation in risk-based deposit insurance premiums. Using the publicly traded bank premium estimate in the first step, and the third step uses the factors identified in the second step to estimate the implicit risk-based deposit insurance premiums for privately held banks. Just in layman's word, so for publicly traded banks, you need publicly traded stock market data, so you can use Martin model, but in order to calculate the implicit deposit insurance premium for privately held banks, we have to do a roundabout way, that is a Penacci 2003 model. So what we have found, the deposit insurance premium for publicly listed Islamic banks are on average 28% lower than those of publicly listed conventional banks, suggesting that publicly listed conventional banks are riskier than their Islamic peers. So, you know, in the middle part of my presentation, I was talking about what is the evidence of the efficiency of Islamic banking system. That is coming from the corporate finance perspective using different technique. I do find the Islamic banks are less risky than the conventional banks. By the way, this paper has already been published in economic modeling. Now, the fourth paper, religion and margin acquisition. And this paper just recently has been published in Journal of Corporate Finance. It's in the top 5 finance journals. So, alhamdulillah, we made first inroad. So that will probably encourage other people to do work in this area, and it will be cited. While the impact of religion on companies and financial decisions has been documented, we know less about the impact of religion on margin acquisition. Previous studies do not answer which specific aspect of religion that could possibly affect margin acquisition activity. How exactly could religion affect margin acquisition activity and their contracting? There is a concept, earn-out agreement is used as margin acquisition literature says. It's a contractual agreement in which payment to shareholders in acquisition can consist of two components, an upfront fixed payment and additional future payments that are contingent upon some observable measure of performance. So the earn-out agreements not only cause agency concerns from the conventional literature, but they also violate Islamic Sharia. So the earn-out agreements can include avoidable uncertainty, ignorance, and possibility of harm, and uncertainty exists at earn-out agreement by definition. The way the earn-out agreement is defined in conventional space, so uncertainty, ignorance exists. When it gets harmed, there is no evidence that earn-out agreements might be harmful. And this is why we bring Islam into this picture and trying to show that, and actually the conventional earn-out agreements is harmful to the shareholders in the long term. So we hypothesize treatment target from discretionary accruals during earn-out period is not significantly different from those of control firms. Treatment target from significantly cut discretionary expenses during the earn-out period. Treatment targets from expense long-term value loss following earn-out acquisitions. So what you do here, measuring abnormal discretionary expenses and long-term buy and hold abnormal returns, the results show to control for any pre-deal fundamental differences between treatment and control not accounted for in the matching methodology, we conduct difference and difference estimation. So this is where the identification endogeneity problem. Target firms in earn-out period aggressively cut discretionary expense, possibly to improve chances of receiving the earn-out payment. So the earn-out deals are followed by periods of negative buy and hold strategy. So we prove empirically, utilizing data, calculating all this econometric technique, the earn-out agreement conventional does destroy value in the long run for the shareholders. So we did not stop there. We also proposed what could be a Sharia alternative for this earn-out agreement. So if you look at a sample conventional earn-out agreement, the one that exists conventional finance, so buy and sell transaction, you make an upfront payment, let's say $100 million, plus 50% of net income. The net income is greater than certain threshold. So by definition, that threshold exists, that violates Sharia. Delayed payments occurrence is not certain, violates Sharia. Managers are motivated to stay. So what could be conventional Islamic counterpart to that we propose in this paper? It is a partnership agreement. Let's say $100 million represents the share of the target, and in exchange for management, they get X percentage out of the net income. So there will always be, it could be zero, it could be positive, but it cannot be uncertain. You know exactly how much you're going to get. So no threshold exists. So Sharia complaint is gone. Delayed payment occurrence certain, amount is not. The Sharia violation is not there. Managers must stay. Finally, this is a work in progress. One of Saudi PhD student is working with me, looking at the implicit market barriers in the stock market. So we bring the liquidity issue of the stock market in the Saudi context. When markets are segmented due to explicit barriers to trade, asset prices can be affected by international restrictions, restricted shares. Implicit barriers such as religious beliefs may also serve as a barrier to trade and create segmented markets. So we are trying to say that, I mean, if there are a lot more Sharia, by the way, in the Saudi market, if you look at this Saudi stock market, 90% are retail player, only 10% institutional, even though the number of shares, but total number is still controlled by the institutional shares. So we take the Saudi market as a sort of laboratory and try to test this hypothesis. Again, I want to emphasize why I'm just trying to create a new branch in this Islamic finance. It's called Islamic corporate finance. Not many work has been done because of the lack of data. I have been saying this morning, but you can use a conventional data in order to prove certain concept that has been enshrined in the Sharia. So you bring testable hypothesis, you take a laboratory, you take Saudi Arabia. We took Saudi Arabia because of this market structure in the stock market, and we try to show that this corporate finance concept also can be worked out in an empirical sense. We have a paper, Mirdad, Hassan, and Hitler find that Sharia compliance is a significant factor in determining stock prices. Pacific Basin Final Journal 2015. We focus specifically on the impact of market segmentation and investor recognition on asset pricing in Islamic financial markets. We test market segmentation, investor recognition. We analyze Islamic and conventional stock in terms of performance, trading, and liquidity. We also examine whether conventional stocks trade less in response to firm-specific or market-wide factors. We examine liquidity and trading activity differences between conventional Islamic firms in the context of market segmentation investor recognition. We will show that market segmentation can stem from implicit trading barriers as well as explicit barriers. Islamic stocks are more liquid than conventional stocks. Islamic stock prices are more directly related to Saudi macroeconomy. We will highlight the role that Sharia screening has on investor recognition in Islamic financial markets, and conventional stocks experience higher idiosyncratic volatility. Islamic stocks trade more directly as a result of systematic factors. I know you're already bored. Let me take out of this my prepared slides. Basically, so what has been done and achieved? For the last 10 years, there has been increasing importance on the empirical research in Islamic finance, partly because, not because from the industry, because industry do their own research in-house, it's proprietary. Or it does its own research because they have a client states they provide the technical assistance. But the supply of this empirical research coming from the academia, because there is a pressure on the academia, keep KPI, key performance indicator, that you have to publish in certain level of journal in order to get promoted, in order to get your salary increase and so on. So that demand is, or the push is coming from the academia. So the academia in search of doing research, so they have looked at every possible opportunity where data exists. So they have really, milked the BankScope database to do a series of efficiency studies, and I will be remiss if I don't see any or single one who does empirical research in Islam hasn't done an Islamic banking efficiency study, including myself. So that has been done. Then we have mutual fund. So we have also made the mutual fund data, Islamic mutual fund. You compare this with socially responsible investing. So we do it with other types of conventional mutual fund. So we have looked at this issue also from different angles using different, esoteric econometric technique. And some studies show they are better, some studies show they are worse. Now, the area that we really lacking, the other area where data does not exist, okay? Now we have to come up with this data. Now there's some studies being done in stock market, like an example I'm giving here. So here I'm looking at Saudi stock market. Some countries, Malaysia for example, they sort of do this Sharia compliant stock and non-Sharia compliant stock. In Saudi Arabia, look at the investor behavior. So you can bring a lot of corporate finance ideas into this picture and do an empirical work. Again, I know probably it's not the interest of the IT to do it, but there will be a pressure for the academia because of the publication. If you want to publish in a good journal, you really have to delve into this thing. So you are taking now, I'm taking all this conventional data and I'm bringing an issue from the Islamic finance concept and trying to apply this data, so the concept within the data, and trying to tell a story and also give a solution. Now the difficult part, and actually I would advise you, you should really, this academic world is not, there is also a club mentality. Club mentality means you have to belong to a certain school, you have to belong to a certain research group in order to get your paper recognized, or you have to write with certain people in order to be published in top journal. I'm not saying that but those are academia, you have to pay attention. The reason I'm saying this, and I said this in the morning, you know, I'm an academic, I'm a scholar, I'm not really a practical guy. So my job is to shake the thought process of the people who are in the work in this finance academic discipline. And my objective and my wish that I try to make this as a social science. It's not like a fringe study like Islamic studies. Try to make an Islamic finance banking as a legitimate field of study. In order to do this, we really need to bring forward, and that was the whole purpose of my presentation. I thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Let me put, again, thank you, Professor Hassan, for covering the whole area of, especially the empirical research on Islamic finance. Maybe let me give you a perspective before we open up our discussion. If you look at the area of Islamic banking or Islamic finance, say, for example, in the 90s, even in the Western world, Islamic finance or Islamic banking is not discussed upon. Why? Because Islamic banks were not that great, meaning that there were some Islamic banks in a number of countries, but they did not form a significant component of banking in those countries. As a result, you see there is no interest for Islamic banking. But come 2000, early 2000, suddenly people realized the word sukuk. And sukuk now becomes an English word. So if you recall, if you talk about sukuk among the bankers, yeah, they understand sukuk. They may not know how to pronounce mudarabah, murabah, but at least they are able to pronounce sukuk. So, meaning that an area which is not recognized suddenly is recognized globally. Islamic finance is recognized globally, although if you look in the context of percentage, it is still small. It's just 1.5% globally of the total financial asset. But it is a significant component. Why? Because, as been mentioned earlier on through various studies, Islamic banking, for example, tend to be more stable. And this is reflected by a number of studies, including those cited by Professor Kabir Hassan, and plus studies by the IMF. So it confirms that Islamic banking is stable. As a result, more and more people are interested to go further. Subsequently, we then look at sukuk. Earlier on, sukuk wasn't great because, as we said, in the 90s, nothing much, but subsequently in the 2000s, there was a lot of interest. And now World Bank and IMF have put it in their scope of work to promote sukuk. And yesterday, just to share with you, again, which we shared with Dr. Kurbani, CFA, Capital Market Authorities of Saudi, together with World Bank, because they started the FSAT program yesterday, organized a conference on sukuk for the first time, and it was a big event. Ministers came, a number of ministers came, Vice Minister of Finance came, and the discussion was how this country should promote sukuk for the development. So as you can see now, more and more countries are talking about sukuk. So that is from the practice point of view, practitioner's point of view. What do the academics do? They need to do research to support this thing, so that whether the kind of work or policy that policymakers are going to make, will it be supported from the academics? Because we know that we cannot just think out of thin air. It must be supported from strong theoretical and empirical. So what we're saying is that the importance of academic research is there, and the importance of policymakers are also there. So there must be a convergence between them. So you have seen the discussion on Islamic banking, mutual funds, sukuk, takaful, home finance, and various empirical research on Islamic corporate finance. I think with that introduction, now I would like to call upon maybe some of the people, if there's any question, to be addressed to the speaker. Yes, first one, yes.
Bismillahirrahmanirrahim. First of all, I would like to congratulate our brother Prof. Kabir Hassan for getting this reward. May Allah subhanahu wa ta'ala bless his work and accept it. I've got 3 observations. The first one is, it has been touched upon in your lecture, the quality of the empirical literature in terms of data and interpretation. I think you came across BankScope. I don't know whether it is still the largest used database for empirical studies. How good is it? How accessible? And is there an alternative that can be built from the stakeholders like L.II, III.I, and the infrastructure of Sibafi and others? The second is a concern about the contribution of empirical studies. And here we may recall what is called the substance against form. And we in academia have been throwing this to the practice of Islamic banking. What about the quality of our research and how fundamental is it contributing? Yes, we do have good modeling. I'm not saying that we should throw empirical and throw econometrics, but we have to be, a bit careful about this sort of studies. And finally, you've stated clearly that if one would like to publish, he has to do this sort of work. How neutral are the classifications of like ISI and some other journals? Because you have to belong, as you said, to a certain club in order to publish in this publication and ISI classified journals. Okay. And thank you very much.
Thank you. We will collect questions for speaker. Yes, 1, 2, 3, 4. Okay, so maybe we'll have the first and then.
I'd like also to really congratulate my friend Kabir for the award. And again, I wish him inshallah success in his future work. My question actually maybe also what he was telling us this morning when we met with him about the challenges that actually are facing the Islamic finance and Islamic economics. My question here actually basically, as you probably well know, that most of the development that take place right now in the financial market in the West or otherwise actually are led by research. I mean, research actually, especially in finance, has led to, all these new models that we are following now in the world actually are based on research. I'd like to see actually how actually Islamic finance has produced so far. Because you see, we here actually at the practical part of Islamic finance in the bank, for instance, we are still using the old type of modes of financial instrument that have been used for a long time. So there is no innovation, there is no newness actually in what we are producing. So how can the research, empirical or otherwise, in Islamic finance contribute to new instruments and new models of finance that we can use to develop actually our member countries?
Thank you. Next one.
Assalamu alaikum, Doctor. Thank you for this nice presentation. Actually, I just like to ask, since I want to see this opportunity, since you are academic, and your paper started from observation until the hypothesis it was derived, and then we need 2 steps. One is to test this hypothesis to come to that theory of Islamic finance. How far do you think we are still, how far we are from the building a theory of Islamic finance? Thank you.
Next one.
Thank you for the presentation, Hassan. My question about you are saying that you are trying to make a new field called Islamic corporate finance. But how do you differentiate the normal firms and Islamic firms? It is easy in the banking sector because they call themselves Islamic banks. But for the corporate, for the firms and for corporations, isn't it difficult? So that is the good way of differentiating between them.
Okay, thank you.
Assalamualaikum. Thank you, Dr. Kabir, for that wonderful presentation. In that presentation, you had one line which stated something on that Muslims don't have access to, most Muslims do not have access to Islamic microfinance. Perhaps I would like to ask whether would you be able to share any empirical evidence on the Islamic microfinance field, on any findings that you have found in that area? Thank you.
Okay, I think that's all. Now, I would like to call upon Professor Kabir Hassan to respond to those questions.
Thank you very much for all of your very thoughtful questions. That means even after lunch, you're listening to me. So at least I have generated some interest. Coming, Prof, data quality, and actually you're right. So BANKRUPTCY has been the most used database, and there is a problem with this database as well. Those who do research in the initial stage, even in my research, I did not check, but later on I had to double check whether the data is telling what it is telling. You have to understand this waste is very quick. When they find a business opportunity, they found these academicians have to write paper, they need data, there is no data, because they have already conventional data space, they brought the Islamic database into this thing. Even if you read this, they will say interest income. There is no interest income Islamic. So I agree with that. This is BANKRUPTCY has problem, but those who do nowadays research, and because everybody knows there is a problem, they have to double check the information is correct. Now we talk about substance versus, yes, same problem we face. Okay, we have done a wonderful empirical research. It has been published in a good journal. So what? I mean, is it really something telling that we can use, or if the way I'm talking today that advanced the field itself? Now, where I'm coming, most of this thing, I'm even though I'm an empiricist, I don't think that empiricism is going to lead to the truth. Okay, I'm just saying this because there are some Islam, because you have to accept some hardcore belief. You cannot change it. Immutable, the word of Allah, right? So you start from there. So our process is it deductive, right, or inductive? From fixed to you go to the specific. But the modern science is the other way around. They from the observation, analysis, they go to this. So there is a methodological debate. Actually, there is a huge debate. And if you have some free time, read Dr. Asad Zaman. He totally refused the conventional methodology. I'm not really into this thing, debate, because I don't have the even qualification to talk about it. But what I'm interested, this is the language the Western academicians understand. Give me the evidence. So even though some of these research are substandard or is not complete, but at least it is knocking the door, somebody is reading it, and that generates interest. And my idea is that if I get one convert, good one, that is going to multiply. So coming back to, I have the same doubt, substance and form of this empirical literature. And finally, the class. Do I have to publish? Actually, not really. And you see, they are dominating us so much, like this ISI, this Elsevier group, and this the Science Direct group. They come to different countries. They meet the university president, including Malaysia. They convince that you have to publish in ISI level journal. I have done a research how many ISI level journal, there Islamic journal, there are indexed, not a single one. There are 3 or 4 Scopus index journal. One is Center for Islamic Economics one. The one I edit, and there is another one coming from Turkey. Only 3, and there is another one 4 that I know. Scopus based. From Scopus to ISI, there is a huge gap. Now we are buying. President is telling us that we need to publish an ISI level journal, so we do all this tricky thing. We try to team up with someone, big name. We try to do something. Some of the research will say we're trying to, beat so much that it tells that it's very similar to conventional. Big journals, they are not going to, this is a paradigm shift. They are not going to accept a paradigm shift. So there is the club mentality. Now the question is, by the way, I want you to read my paper, the merger and acquisition paper. I did not, I was lucky that I did not have to sell my soul to them. It got accepted. And actually I told my story, and I was lucky, alhamdulillah.
And what if we can get one or two that's going to be cited, that will encourage other PhD students to come and do research. So that in that I have achieved my objective. So not really, I mean, an empirical work is not going to solve the problem, because we have the matter of faith we cannot change. We have to go that route, and this is our part and parcel of our religion. Now, somebody is talking about the quality of research. Quality, yes, there is a lot of problem, I must tell you. You know, I'm an editor. For some time, you know, even mentality. For example, in academic world, by the way, Professor Azmi is very kind enough if I review any article for him, or Dr. Abdul Turkasi, I get money. But in academic world, it is a sort of thing you do. So when you agree to review an article, you have to review the article, give a very good report within a certain period of time. And we understand this culture. So I edit a journal. When I send a paper to someone, the next thing is, brother, what is the remuneration for doing this? You know, in this United States, if some top journal send me a paper, we consider that to be a high honor that this editor has found me to review this article. So I have to fight with this battle. Secondly, even let's say I find someone to agree, 50% will be surprised. I'm talking about, we are talking about the values in Islam. We talk about, you know, keeping your word and all this. 50% ultimately don't even submit their review. So I'm dealing with this world, the Islamic world, that the value system, the culture is, you know, you need to really shake it. I'm not talking about the practitioner, I'm talking about the academic world. Everybody is busy. You know, they want to be on the board of the editors, but they wouldn't do the simple task of, you know, reviewing 4 or 5 articles. Whenever sent, busy. So this kind of thing, the culture thing, we really need to change when I talk about the quality of research. Product development, my friend and brother. Okay, by the way, I missed one of this area. I talked about in the morning. Theoretical literature also is very limited in Islamic banking and finance. Now somebody is talking about mathematical modeling and calibration because data doesn't exist. So start with the postulate, create a mathematical model, then calibrate with artificial data and see what it says. We can do this kind of research too in the absence of data that exists in the real world. So the product development is a big issue. Why you can? You know, there's a saying, I'm sure you heard this thing, that Islamic banking has been hijacked by conventional banking industry. Why? Because they have the skill set. They come and they can come up with a product very quickly. The entire sukuk industry, if you look at my friend Mike McMillan, he tells me, I mean, he makes a lot of money by advising the sukuk issuers. He's a lawyer. It's a legalistic thing. So we really, in order to make the Islamic finance as a study or discipline, as a social science, we really have to come back. I mean, not divorce. I'm talking about go away and bring this realism into this thing, not only simply on this legalistic aspect of Islamic financial contract. Yes, we need this, but in order to make it whether it works or not, we really have to bring realism to this thing. There's another question was methodology. Okay, you said, I already answered this question. Okay, we have some construct, you know, hardcore we cannot change. We have the Quran, Sunnah, these 4, then we go down. But here I'm saying that from the Quran and Sunnah, I can, from my understanding, I can build an hypothesis. So if the hypothesis that, okay, riba is haram and it does harm, one of the implications. So I can, okay, I look at a country which has the part of the system, how much of the system is riba based and how much is not, and I do sort of comparison. I may get the answer that God has said, I may not, but at least that's a start. So I'm not really testing what God has said, right or wrong. I'm just testing my understanding and how it relates to this thing on this world. So we have to find a compromise between these two, inductive reasoning and deductive reasoning. Unless we do this, we are not going to move forward. Part of the problem that we face, because we do not do that, because we are fear, we are afraid that whether we are trespassing the God's word, we are not really. That's the reason part of the intelligence don't want to touch it, because we might be, you know, there is a fine boundary of what I'm doing. Am I questioning God? The other part, I think more relevant, lack of skill set. I don't have the skill even to build those kind of model and try to answer it. How to Okay. Probably I said this word wrong. I mean, what I'm saying that I want to make, with everyone or the researcher, that I want to do the right thing so that West recognizes Islamic finance as a field of study, as a social science. Like in economics, you have, Keynesian economics, rational expectation is your institutional economics. Why can't we have an Islamic economics or Islamic finance and banking as an area of study? In order to do this, we have to follow the tongue of the West, the language of the West that they understand. We are not selling our soul to them. I don't want to, and actually I'm against it. So in order to do this, you have to speak the language, which is build a model, collect data, test hypothesis, and then you can communicate with them. Then they will get interested, 2, 3, it may take 5 years, and that person will see the value, and actually everybody is craving for the values. Okay, that is good for everyone. And I sincerely believe that Islamic financial principles has this value system that is good for everyone. And in order to convey this message, we have to go this route. Building model, collecting data, testing it. And to do this, we have to develop the skill set through the university education and so on. Finally, Islamic microfinance, we have a great scholar sitting in the back. Actually, he is doing very commendable work on Islamic social finance. And actually, with the Professor Azmi taking over, read his report. And when I say that microcredit is a big industry. And actually, Bangladesh is a birthplace of microcredit. It exists in many countries, but Professor Yunus popularized it. If you look at Bangladesh, which is what? Less than 1% in Islamic microfinance. We do have microfinance, but not Islamic microfinance. Part of this reason the microfinance got very big because the West want to enter a country through these different NGOs, and they have provided capital. And even if you read the history of Grameen Bank started with the foreign donation. Whenever it comes from Islamic finance, we don't get any money. And after this 9/11, even if we get the zakat money and all these things that have been channeled, that has been also, the flow has been slowed down because of this, watchful eyes of the West where this money is going. So Islamic finance is now starving out of funds. So we really have to be innovative. One of the model I want you to study is Islamic Bank Bangladesh Limited. They have the RDS model. That is not a separate entity. It's within the bank itself. And it's a wonderful model, and Islamic banks around the world can follow this model, RDS, which will be good for everyone. So that's pretty much the question. So
thank you very much, because we finish at 3 o'clock. So now I hand over the session to Dr. Spender.
Okay. Alhamdulillah, express our sincere thanks to Professor Kabir Hassan for very informative actually lecture that maybe broaden our ideas into empirical results, how to use it, how to innovate really Islamic finance and banking. Also, sincere thanks to Professor Azmi for moderating this session, and also for his good words actually in the beginning about the conference that we attended yesterday in Riyadh. Finally, I really thank all of you for attending and contributing to this lecture by very important questions and inquiries of this important topic. So inshallah, thank you very much again, and we will meet inshallah in similar occasions. Assalamu alaikum.
Assalamu alaikum.